Okay, it looks like we're up and running. So welcome everyone to the first live broadcast of MyCrypto.guru. First, if you haven't joined the chat, please join the chat because that's where we're going to be asking the questions, or actually going to be answering the questions that you guys ask. So the plan right now is that we're going to watch this kind of lesson one of the intro to cryptocurrency that I came up with about 4 years ago. Everything in there is still technically accurate. Anyway, so we're going to start with that, and then once we finish that, we'll answer some questions. So again, if you're not in chat, or if you're not on the Facebook page, which should be broadcasting out there on my personal one at this time, we're just going to go simple because again, this is the first time I've done this. Then I can go ahead and answer your questions for you. So again, get on my personal Facebook page, and if you're on live, and get on Vimeo and get on chat and ask some questions as we go, and I'll answer them here at the end. So let's go ahead and start this. You might see me get up and down a few times because I'm not going to sit here and watch the whole thing. I don't need to. But we will go ahead and get this started, okay? So let's start here. Boy, this is... There we go. One of the first things I always hear when I talk about Bitcoin is, it's not real, it's not currency, it can't be, it's not backed by the government. As if all those things had to be true for a currency to be a currency. So if those things don't matter, then what does make a good currency? Well, for one, it has to be generally accepted. It's kind of obvious, I think, isn't it? The currency must be accepted by people in order to be a currency. Number two, it has to be divisible, easily divisible. The currency must be made in a way where it is easy to divide for purchases smaller than a whole unit of the currency. I.e., if you divide the currency in half, each should be worth 50% of the whole. This is why we tend to not use vehicles, jewelry, even gold and silver as a currency. It's not easy to divide, and it's not easy to say, well, I want a dozen eggs. Well, that doesn't really translate to a Chevy. So, number two, it needs to be divisible. Number three, a currency should be somewhat stable or consistent. While economists will argue whether a constant value currency is good or even possible, having a somewhat stable currency is preferred. You can't have wild fluctuations. You can't have a loaf of bread that's $1 on Monday and $8 on Tuesday. It's not a currency that people are going to use. I know what you're already thinking. Bitcoin's got some fluctuation, but just bear with me for a bit. We're going to go over that. Number four, it must be transportable. It's easy to move from one location to the other. We don't use blocks of lead for currency because no one's carrying around 40 pounds to get a gallon of milk. And the fifth characteristic of a good currency is scarcity and integrity. They kind of work hand in hand. So a good currency needs to be in somewhat fixed supply. Obviously, in the United States, we have a little bit of inflation. We print a little bit more money every year, but in general, somewhat fixed supply. And, which is your scarcity, and not easy to duplicate or copy. And there's your integrity. If a currency is easy to duplicate, counterfeits will emerge. And the user of said currency can't trust the currency they're receiving. And therefore the currency dies off and it's not a good currency. So remember, currency replaces tangible goods. It's a quick medium of exchange for tangible goods between people who don't want to trade a goat for a dozen eggs, okay? So in order to do that, it must accurately reflect or represent the goods and services is exchanging for barter. So having gone over all this, how does Bitcoin compare? Number one, well, generally accepted. Let's talk about that. Bitcoin is becoming more and more widely accepted, primarily by vendors on the internet. However, Tokyo, as of November 25th, 2017, has over 4,500 merchants just in Tokyo that accept it at the actual point of sale. So Bitcoin's acceptance is on the rapid rise. Is it generally accepted right now? I think one could argue probably not, but it's getting there. Divisible. I can send you 1/100 millionth of a Bitcoin. Fractions of a fraction of a fraction of a penny of a US dollar. Bitcoins are currently the most divisible currency on the planet. Stable, consistent. Well, okay. Bitcoin prices are currently pretty volatile, which is why I personally view Bitcoin as an investment and not a currency. However, I do believe that's going to change. It can be used as a currency, but until it becomes large enough market cap wise to only have small fluctuations in daily price, I personally don't view it as an actual currency. Number 4, transportable. Bitcoins can be transported on your cell phone or any other device that holds Bitcoins extremely easily. I could have $1 billion worth of Bitcoins in my pocket and it would take up no more space than the cell phone I have there now. Your wallet seed can be memorized in lieu of any kind of cell phone, and you can rebuild your coins wherever you happen to be standing. They can also be sent anywhere in the world in seconds and confirmed within a couple of hours. Transportability is nothing to worry about with Bitcoins. So number 5, Bitcoin, scarcity, and integrity. There will only ever be 21 million Bitcoins in existence. Now, for those of you in the know, I understand it's a fraction below that. For our purposes, we're going to say 21 million. So just do me a favor and don't send me a bunch of emails. Now, the 21 million is hard-coded into the Bitcoin protocol. This number can't be changed without changing the program on every computer, every server, and every cell phone that uses Bitcoin. So one could effectively say that Bitcoin scarcity is locked in. As far as integrity, which now we're referring to counterfeit coins, every transaction that is sent to the network is verified by thousands of miners. At any given moment, 7 to 8% of the transactions hitting the network are counterfeit. They're attempts by someone with a hacked wallet to spend coins they don't actually have in their account. Since Bitcoin started, not a single coin, counterfeit coin, has ever gotten through. Period. Bitcoin's integrity and ability to stop counterfeit transactions is absolutely unmatched by any governmental currency. Now that we've gone over what constitutes a good currency and how Bitcoin can fit in based on some metrics and not quite by others, log into your account at MyCryptoGuru and ask your questions. I know this is a lot to take in, but we are here to help. In the next video, you're going to find out how the blockchain system works. This is the technology that runs all cryptocurrencies. Okay, so I'm going to go ahead and stop this now. We've got kind of a basic. Interestingly enough, I made these videos 4 years ago, and I want to go over a few things that may be a little different, maybe a little additional to what we had before. Again, a lot can change in 4 years, but not that much. So what we have here, first of all, we say Bitcoin is generally accepted. Well, it is generally accepted, and from 4 years ago, it's massively more generally accepted. I have, for example, here with me something called a BitPay credit card. So there's a little credit card here. Don't worry, there's no card number on it. BitPay is one of many, many merchants that have a MasterCard or Visa that you can load with Bitcoin. So I can transfer money to my Bitcoin wallet with BitPay, and then when I feel like it, I can cash that in and I can throw it up to my debit card, right? And then I can use that card anywhere that Visa and MasterCard works. I can use it to pay my credit cards down if I want to. It is a debit card in all respect. It's just powered by Bitcoin. So that right there gives me the ability to use Bitcoin anywhere in the world that Visa and MasterCard works, which is massive. Okay? So if you do a quick Google search, you can find merchants online that take Bitcoin directly. Now, why is this important? Why is it important that Bitcoin's accepted? Well, obviously, supply and demand dictate the price of pretty much everything. So if there's a certain amount of supply and there's a certain amount of demand, the price will be X. If demand goes up and supply stays the same, demand will be X plus 1, plus 2, whatever it may be. The fact is demand will go up. So the more places that use Bitcoin, the more demand there will be for Bitcoin. The more demand there is for Bitcoin, the higher the price should be. Now, Bitcoin in general is kind of working as a store of value, and we can talk about that later if somebody wants to, but Bitcoin is really more of a store of value. It's not really a currency in its current iteration. People are really buying it as more of the digital gold, but it's kind of a more advanced topic I think we might get into later on. Again, let's just keep this kind of simple now. So, number 2, divisible. Here's the interesting thing. Right now, we can divide Bitcoin down to the ninth decimal point. That's called a Satoshi. If all the Bitcoin in the world were to go away and we were down to one Bitcoin left in the entire world, what would we do? We would just divide it down further. If we only had one Bitcoin to run the entire world, okay, we would just, sorry, I'm going to adjust this a bit. We would just divide, I'm tired of looking at my forehead. We would just divide the Bitcoin down to a smaller increment. We're still not getting more Bitcoin. We just have one Bitcoin that we can take to a smaller number. So we could literally run the entire world's economy on one Bitcoin. We would just divide it down to, let's say, the billionth decimal point or whatever it is that we want to divide it down to, and make that the new unit and not change the value of Bitcoin, so to speak. So infinitely divisible. Now, number three, volatility. Again, when I recorded this a long time ago, volatility, sorry here, I just got to look at something. Volatility was ridiculous. I watched Bitcoin drop 12 hours, or 50, or 80%. Sorry, I got sidetracked. I watched Bitcoin drop 80% in 12 hours. Okay? So volatility was massive back in the day, but you have to understand Bitcoin was only a few $1 billion market back then. Now it's around 680, I think 750, maybe with today's run up. So obviously, the larger the price Bitcoin achieves, the larger the market cap, the bigger the product becomes, the harder it becomes to move. Okay, let's say that another way. If something is worth $100 and I want to double the value of it, I simply have to add $100 in value. If something is a billion, I have to add a billion. Do you see how the numbers get harder and harder and harder the larger it gets? So if I want to do a 10% move in Bitcoin, I'm playing with about 70 to 80 billion dollars right now. If I want to do a 10% move back in the day when Bitcoin first started, it literally could have been a several $1,000 move. So that's what you're playing with. The bigger Bitcoin gets, the more stable it becomes. And you can just see that in the charts. You can just see smaller and smaller increments of the up and the downs, okay? Because it takes more and more energy to move it. So anyway, number four, okay, let's talk about portability. Back when I recorded this story had not broken, but there was a North Korean general. There was a discussion about this North Korean general back a few years ago who defected to South Korea. Somehow or another, he was able to get a hold of some Bitcoin. I should put something else in the background. If I knew this program better, I'd get rid of that background image. Sorry. Anyway, so he defected to South Korea, and what he was able to do was get a few little Bitcoins under his belt, into his wallet, delete his wallet, and memorize the 12-word seed. And when he got to South Korea and he defected, he was able to at least have some semblance of resources. I'm sure South Korea has something that they give him, but he had his own resources because he memorized those 12 words and he went to a wallet and he recreated his wallet. Okay? So understand when I send you Bitcoin, okay, it is not stored on your phone. What it is your phone has this long 4,000 digit password on it. Okay, that's roughly, we're simplifying. And that passcode gets you into your account on the Bitcoin network. So when we say there's 12,000 nodes out there, there's 12,000 objects out there that all have a copy of your account, because everyone has the blockchain that has a copy of your account, okay, that you can access anywhere in the world as long as you can access one of those nodes. Okay, that's the important thing. And your wallet doesn't have to be online because you're not sending money to your wallet. I can take a copy of my Bitcoin address and I can give it to everyone in the world to send me Bitcoin to. Okay, and my phone could be burned up and my computer could be destroyed. And the moment I get access to another one, all I have to do is type in my words and I can get my money back because I'm not getting it from the device. I'm getting it from the network. And you're starting to see kind of the power of how this pulls together. So anyway, so what we're saying is that like today there was a story where a guy had his wallet, his hard drive confiscated, and he won't give up the password. And there's about $60 million worth of Bitcoin on there, and they're never ever going to get that Bitcoin unless he gives up the password. And if he ever gets released, he can walk somewhere and he can type his words in and he can get his wallet back, assuming he set up his wallet correctly. So that is power. This is an asset that no one in the world can take from you short of beating the password out of you. Okay, which actually is probably the biggest security flaw. Number 5, counterfeits. Okay, I like to point this out. Again, this video was made back in 2017. Okay, and guys, we're coming down to the end of where I'm going to talk. So if there's questions, please throw them into chat so I can go ahead and take them. Because if there's no questions, then we're just going to go ahead and cut this here, and worry about it later, I guess. So if you have questions, go ahead and throw them into chat. Throw them into the Facebook. Throw them into a Facebook message to me. Whatever I'm on. That's what you're seeing me click on whenever I click on things on the screen. You're probably hearing my mouse go off. I'm monitoring those. So if there's something you want to know, please tell me. I'm stalling a bit to give you time to type your questions in. So number 5, last point I'm going to make. And again, if there's no questions, then we're cutting this. Counterfeits. So we still have about 8% of the transactions hitting the network where people are trying to counterfeit and essentially double spend. So what do I mean by counterfeit? Well, it means that I've spent money out of my wallet. Sorry, hair, cat. So I have money in my wallet that I have sent to someone, and now my wallet shows a zero balance because it's accessing the network, but I program my wallet to send a transaction back up to the network again, trying to claim that I have more coins. Now, there are certain ways that you have a better chance of accomplishing this, and again, we're going to keep this simple, but the point is that these are these attempts by these guys. And again, anywhere from 7 to 9% of every transaction that's hit the network since the network started. Okay, in 2008, when Bitcoin first came up, we're hitting about 7 to 9% once it started getting popular, right? So they've tried and they've tried, and they've never been able to counterfeit a Bitcoin. They've never been able to double spend a Bitcoin. And that is extremely important. Now you have complete and total security in your money supply. There is no way, even for a government entity to come in and print more Bitcoin. It simply cannot work. Let me take that back. Let's take a little advanced. When we get into miners and verifications of accounts and all that stuff, or transactions, there is a way to do it. But let me say this: there's not a way to do it without spending billions and billions, and I mean literal billions of dollars. And even if you spend this billions and billions of dollars, you still have to have enough electricity to power the equipment that you would have to buy. And you still would only have a few percentage point chance of getting ahead of the network and getting a double spend through. So it's really not worth it. Okay? And as more miners get in, it becomes harder and harder to do a duplicate. Anyway, the point is, let's check. Let's see if we have any questions. Okay, so I got a question from Kevin Ross. God help me, I'm glad you're here. I was afraid I didn't have a question otherwise. Okay, so besides central banks, what are some other threats to the viability of Bitcoin? Interestingly enough, the main central banks, and let's say the investment banks, JP Morgan, Fidelity, Goldman Sachs, and I think Morgan Stanley's getting in on this, but don't quote me on that. I don't quite remember that one. They are mostly on board. If you look up ARK, A-R-K, ARK Investments, I'll put that in chat. They are a massive mutual fund that is big, big, big into Bitcoin and cryptocurrencies. So, hold on. Okay. Yeah. Okay, Kevin. We're getting a little zealous here. I'll get to that question too. So what are some threats to the viability of Bitcoin? Let me try and answer the question instead of telling you why I don't think that's going to be a problem. We could have a situation where the U.S. government comes in and says Bitcoin is banned. That is always possible. Is it likely? No. I think it's pretty much, if not entirely, impossible. We have an entire ecosystem here. We have state licenses. We have federal licenses for exchanges. I mean, I don't see them going out and allowing something then all of a sudden trying to ban it. The American way of doing things is to tax it. That's what's going to happen, and that's what they're going to do. We're going to find a way to tax it. We already have found a way to tax it. They're going to try and shore up those holes, okay? Where this guy over here has some coins and he didn't get taxed on it. Maybe we could plug this hole over here and all that. But I don't really see, realistically where anyone could ban it effectively. Now, if we go back, and let's just for a thought experiment, we go back and say, okay, someone spending, I don't remember the current estimate, but so I would have to imagine somewhere around 10 to 15 billion dollars to try and get a 51% attack. Sorry. So if someone were to successfully pull off a 51% attack, you would see Bitcoin tank. You would see everything tank. Pretty much all cryptos would tank. Um, but then the question we go back to is okay, so you spend 15 or 20 billion dollars to buy the equipment you need, plus all the electric that you would need to do it. And again, you would only have a very small percentage chance of getting ahead of the network and double spending a coin. But if you were successful in even getting a single coin double spent, even a single Satoshi double spent, that would ruin any any faith in the Bitcoin network. Okay, that would destroy Bitcoin. That is probably a bigger chance, even though I would say that is virtually a non-existent chance. I would say it's a bigger chance than the government trying to ban it. Okay. There's no talk in any government agency, U.S., South Korea, and Japan, France, some of the big economies of the world, that I've heard of anyone talking about banning this. They're all trying to figure out how to make it work. And of course, tax it. So, next question. Let me just make sure there's no questions on the Facebook side of things real quick. So, next question is, so does Bitcoin start to function more as a currency once it reaches full value? Well, I mean, obviously, I understand what you're saying, but let me just clarify. There really is no full value. Let's talk about the value side of things real quick. There was a meeting 2 days ago. Michael Saylor, Saylor, they put a massive amount of their money, like about $1 billion they had lying around, which is hell of a problem to have, into Bitcoin back in December, and they've been buying more and more since. And they've done obviously very, very well. And they had an online lecture, kind of like this, obviously with a lot more people. They had 1,400 corporations, CFOs, COOs, and CEOs that were in this meeting to discuss how his company put together this Bitcoin operation that they did, why they did it, and how they kept their money safe. So that meeting was 2 days ago. Now we see Bitcoin going back up. The ARK investment, the woman who runs that, and I can't remember her name right now, but she's brilliant, and she's probably one of the very few talking heads I actually have any consideration of what their opinions are about things. She did a calculation, and if 1% of the money that was in the 1,400 corporations that signed up would go into Bitcoin, Bitcoin could jump about $40,000 a coin. Not up to 40,000. We're talking by 40,000. So if it was 35, it's now 75. 10%, you're about a $400,000 jump. So the full value is I mean, it can be whatever it is. It's a number. But with the price climbing, okay, I would expect Bitcoin to become more of a currency, yes, whenever the volatility becomes a little less. I mean, just like I said in the video, nobody wants to have a currency that is 1 unit of bread one day and 4 units the next day and half a unit the day after. That volatility obviously is going to keep things like this from running as a currency. Right now, it's primarily a store of value, and I would say most people really look at it as an investment. I don't like to look at it that way, other than the fact I am using some to work on the house. But, you know, the point of having Bitcoin for most people is to get more dollars, okay, or whatever their local currency is. Um, and that's fine. Okay, that's fine. I'm not particularly part of that camp. I have Bitcoin because I believe Bitcoin is going to be a currency of itself at some point in time. But right now, people buy it for investments, and that is primarily because it's growing. If it was only ticking, 0.5% a day, up or down, then no one would buy it for an investment. It would be considered essentially a use currency, or at least a store of value. Like, I know it's going to be worth this, just like I buy a chunk of gold to throw in my safe downstairs, right? So, yeah, the higher the price, the less the volatility. The less the volatility, the more people are going to use it either as a currency or as a long-term gold-like store of value. Think about all the great things that gold has, okay? Fairly stable price. Obviously, we've seen some fluctuations here recently. But take all the good things that people like about gold, Okay, you can't take it away from me unless you physically get it, etc. And then add in all the cool digital features of encryption. Okay, the seed that you can memorize and no one can touch. The inability to get into your phone if you password it correctly and take your money. And you're starting to see why a lot of people are saying, okay, this is the merge of everything great about digital stuff and everything great about gold. And you're starting to see why people want it. So, yeah, to answer your question, the higher the price, the more it's going to start becoming an actual currency. So, Cody Glenn Williams, my first Facebook question. Should you buy based on future viability as a currency or based upon speculation of massive gains? Well, we're going to have to go back to what people are looking for. Um, Obviously, I want my Bitcoin to be more valuable, and the way it becomes more valuable is in relation to other currencies. So while I don't like the fact that it's valued on dollars, eventually I hope it just becomes valued on its own. It's probably always going to be tied to the dollar or some country's currency in some way. So the okay, follow up. As a store of value, is there a point of value where it doesn't make sense to invest anymore? If your goal is, well, it depends on your goal. If your goal is to create more dollars, then I think, yes, today is a very good time to buy, just like I thought it was 8 years ago when I told you guys this. Actually, holy crap, 10 years ago when I told you guys all this back in 2011. I didn't realize it had gone that. COVID, man, like you're gone for a year and it doesn't really, like you don't even feel like you lived it. So yeah, I think it's still a good time to buy if you're looking to do that. Now, once Bitcoin levels out to where it's at a point where it is, a 0.5% tick, then I would consider it more of a Forex bet. If you know what Forex is, that's just trading currencies. And if you wanted to trade Bitcoin on a currency level, but man, we're probably talking realistically, that's probably a 5 to 6 year position where Bitcoin gets stable enough that it would be really a currency. And Cody, I hope you're watching right now. Does that kind of answer your question? Because yeah, obviously, if there's no volatility, if the price really isn't moving, then why have it? Eventually, it's going to stable out. But you're talking, man, the way it's looking. I mean, right now, let's put it in perspective. Gold is kind of what I would consider the equivalent currency, let's say, of what Bitcoin would be in the physical world. Gold, last I checked, was a little over $9 trillion worth. That's 9,000 billion, 9 million million. Okay, Bitcoin right now with a price of about 40,000 is somewhere around, I think, 800 billion. Let's just keep the numbers easy. Let's say Bitcoin's about a trillion, okay, and gold's at 10 trillion. I actually think it was like 9.4, but it's run up a bit. So let's just say it's gone to 10. Let's keep the numbers easy. That means that for Bitcoin to be valued what gold is valued at, okay, and to gain that stability that gold has, okay, you would need to increase the price 10 times. We're roughly at $400,000 a coin. And I don't see that anytime in the next 2 years. Okay, now again, speculation on my part. I don't like to speculate too much. I like to deal with the facts. But the fact is that $400,000 for Bitcoin to get to the size of gold, I think is several years off. And obviously, once it becomes more stable, then there's less of a use case to buy it as an investment. Okay, so Kevin's got a question here. It says, has Bitcoin lost a lot of its anonymous? So I'm going to assume you meant anonymity. It took me a second. Hopefully it's what it is. If it's not, let me know. Has Bitcoin lost a lot of its anonymity? So if you transact person to person and you transact between wallet to wallet to individual, there is no way, if you do it right, okay, if you do it right, there is no way that you can be tracked. There's no way it can be traced back to you. Now, if I give someone my wallet address, and my wallet address is 123ABC, let's say, and they send money to it, and then they tell someone that's my wallet address, or I post publicly that's my wallet address, well, obviously that can be tracked back to me. But from a purely technical standpoint, of how Bitcoin works, you are never going to figure out that was me. Now, there's ways to infer. So let's say I get paid 10 Bitcoin today. And people know that I have 10 Bitcoin in there for some reason because I'm an idiot and I tell people how much I have. And I turn around and I send 10 Bitcoin to someone else. And it's exactly 10. Well, they could infer, probably that it might have been me in the blockchain, whatever. But there's no technical way to really find out how much I have unless I screw up. Now, that's private wallets. If I go throw something onto an exchange, well, hell yeah, they know exactly how much I have because guess what? I gave my name when I put it on the exchange. I have money on BlockFi, BLOCKFY, which I will probably do an intro video on them at some point in time. And what they do is they loan your Bitcoins out and they pay you interest in that Bitcoin cryptocurrency. So, or I'm sorry, in the cryptocurrency of your choice that they support, not just Bitcoin. So I have money on BlockFi and it just generates interest for me, whatever, every month. And absolutely, the government knows I have that. So to answer your question, from a Bitcoin standpoint, Bitcoin is very untraceable. I don't care what these people say. I don't care what the government comes back with. They are not doing as well as they think they're doing, or as well as they're trying to tell you they're doing, without doing a lot of work. Okay, so there's another way. There's one more way that you could be screwed up and not know it. Okay, so let's talk about how transactions work. I have my wallet on my phone. I send the transaction, okay? And I go click, 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 and I send the transaction up. My wallet, if I'm not watching it or careful, or just say in general, you don't really care. My wallet has to connect to a full node to verify the transaction. It sends the transaction up to a full node, which then broadcasts it across the network. This is actually the next video in the series. That node that I'm connected to could be compromised. You're right, could be compromised. If you have a massive amount of money that you want to keep anonymous, then you would do the smart thing and you would run your own node, okay? And you would set your wallets up just connect to that node. And that way you know that node's not keeping track of who's connecting to it, what IP address they broadcast from, what wallet they use, and et cetera, et cetera. Now, node still won't know how much you have, okay? And it won't know who you are. But if they want to find out, they could cross-reference the IP address that broadcast the transaction, okay, and then figure out, like, you were the guy connected to Verizon at IP address 1.1.1.8, okay, or whatever. It's not, but, you get it. And they can figure out that was you. So if you have that much money to worry about, well, then you can set up a full node and learn about all that. But in a general sense, yeah, you're very, very, very anonymous without something being on the back end outside the Bitcoin, so to speak, technical spec, screwing you up, if that makes sense. So, anyway, I think I got a little wordy on that one. Okay, guys, so I'm out of questions. Do you guys... Okay, I'm going to take a real quick little poll here, because I think it's really just Cody and Kevin that are watching this thing. Do you want me to load up the next video and then answer questions on that? Or do you guys want to go ahead and cut it here, and then if you have questions, you can contact me directly? I'll let you guys decide. So, A or B? A, load up the next video. B, let's cut it here. Let's learn what we learn, and then let it go from there. So I'll give you guys about 30 seconds or so to answer that. And then if I don't get any answer, then we'll go ahead and cut it here, and then I'll post this up for public. God, I wish I had the Jeopardy theme song. The ending thing. Anyway. Okay. So we are running to the end. A. God damn it, Kevin. I was kind of hoping to cut it. Okay. Let's see here. Oh, wait. Hold on. Can we do that? Yep. Okay. Let's see what we got here. Okay, so I'm going to go ahead and load it up. Screw it, why not? Yeah, thanks, Cody. So I'm going to go ahead and load it up. Let's go ahead and get that done. And you guys bear with me a bit because I've got to figure out how I can listen to this without it double playing back to you guys. Okay. Hey, it worked. What do you know? God, you think I was 80 years old? So let's talk about blockchain real quick. Let me go ahead and load this up, and we'll go from here. If you're following these videos in order, and you're going to hear me say that a lot because you should be following them in order, then you'll have an understanding now on how Bitcoin is and is not a currency, and how it's starting to just fit into this global economy. In this video, video number 2, we're going to cover the engine that runs the vehicle, blockchain. Again, I want to stress, you might be thinking, why is this important to me? I just want to invest. Well, think a second. If blockchain runs all cryptocurrencies, and it does, and all blockchain systems are basically the same, what better way to spot a scam than to know when someone is telling you, my coin is different, and you know it's a pile of bullshit. Learn the technology and you'll be less of an emotional investor. So, now, on to blockchain technology. So what is blockchain? Blockchain is the technology that runs all cryptocurrencies. And when I say all, I mean all. Every cryptocurrency on this planet as of November 2017. You know what I'm going to do? I'm going to go ahead and pause this in between when I want to interject something so you guys kind of save your questions at the end. I want to be very clear on this blockchain tech. It runs all cryptos. And I may say this in the video. Unfortunately, I can't listen to my video. I should have listened to it before we started in case we got to it. I can't listen to the video on this end or it's going to send back out to you guys. But here's why this is important, okay? There was a coin out there called IOTA. Internet of Things or something like that is what they were talking about. I don't remember. Anyway, and I get into IOTA a little bit in my intentional and unintentional scams in another video way down the line. So blockchain tech runs all cryptos. You can modify it a bit. You can change how many blocks are made. You can change how they're sent out or whatever. But in general, you know, a dog's a dog. So IOTA was out, and I had a bunch of friends who were like, oh, you really need to get in this, doing that. And I looked at their paper, and I said, you know what, they're using a lot of really big words, and they're trying to make it sound like they don't use blockchain tech, which means to me they're lying to me because they were lying to me. And you can tell now that IOTA is basically a dead project because it was bullshit from the start. So, you know, they were trying to claim they were some kind of new great innovation in blockchain. Blockchain is the new great innovation. There's not a lot of modifications. Even Ethereum, who has really tweaked and changed and modified how their blockchain works, it's still a blockchain. And they're not trying to tell you otherwise. That's one way you can tell if what you're walking into is a scam or not. Should you really invest in this? Are they trying to claim that they're not using a blockchain or that they've written their own new tech on top of blockchain? They're probably full of crap. So anyway, let me go ahead and start this back up. I just want to interject that a bit. Is using some variation of blockchain technology originally developed by Satoshi Nakamoto. In fact, one of the best ways to identify a scam is if they're telling you they do not use blockchain. That was my wife. Any cryptocurrency that tells you they're doing something special and innovative and not just business as usual, well, as usual when it pertains to the new business of blockchain, is probably lying to you. Now, to get your head around blockchain quickly, here's a simple analogy. Blockchain is to Bitcoin and other cryptocurrencies what the engine is to Ford. The engine is an independent technology that Ford, Mercedes, GM, all those companies use. But they are not Ford, GM, Chevy, and Mercedes. Bitcoin is the product. Blockchain is the technology. I want to say this again. Bitcoin and blockchain are independent of each other. Why do you care? Because it means that when you hear a company saying they're implementing blockchain technology, it doesn't mean you should run out and buy some Bitcoin because it shouldn't affect the price of Bitcoin. So, now that we have a general idea of what blockchain is in a general sense, let's get a little more specific. Blockchain on a basic level is simply a series of files in which the next file in the series is partially valued by the file before it. So each file in series is tied to the last file in some way. What does this mean? It means we can place this series of files, this chain, if you will, on any computer in the world, and whether we trust the computer or not, we know, because one file value affects all the files after it, that those series of files have not been modified. If those files had been modified anywhere in the chain, all the files after the modification would no longer add up to what we know they need to be. This means simply that we can trust this system to have not been tampered with quickly through a series of mathematical calculations. That's the beginning of the trustless system of Bitcoin. So now we see that the files are all connected to each other, but what's actually in the files themselves? We're drilling down from file chain to files to transactions. Inside each file is a list of transactions. In the case of Bitcoin, it's a change of who owns Bitcoin, where it was sent, who moved it forward, +3 to Sally, +8 to Mike, +1 to Jennifer, +6 from Andrew, et cetera, et cetera, et cetera. Now we use a lot of fancy math to figure out how the system adds up correctly, to figure out if anything has been tampered with or changed, but otherwise that's about it. This is the basis of blockchain tech. But what else can we use this tech for? How about packages as they move between locations in the country? Maybe tax records, property ownership, obviously banking records. Anything where we want to keep track of changes, we can use the blockchain system to do it with, and do it in a more secure and less costly manner than we currently are. It's actually really, once I finally put my head around it, I realized how amazing this technology really is. But you have to remember, for an investor, this tech means nothing to Bitcoin's price. Now, lastly, let's take this blockchain system and use it to keep track of monies owned between you and the rest of the world. So now we take this blockchain and we place it on 10,000 computers across the internet. And you can see the beginnings of how Bitcoin can be decentralized and still trusted. The blockchain system is by far the biggest innovation to happen to any record-keeping system since the invention of the computer itself. If you want to know a more technical answer to how the blockchain works, we have videos on the website mycrypto.guru. What we're offering here is a good, solid foundation to at least give you enough knowledge so you know what questions you can ask. And obviously, as Sorry, I want to drop that right there. Ooh. Forgot to turn off that sound. Ooh, that's a good place to pause. Jeez. So anyway, mycrypto.guru, again, these are old videos, so you can go to mycrypto.guru, but it will take you to the Udemy course. We basically took that site down because right after we launched, the powers that be all decided that we couldn't advertise any crypto-related stuff. So anyway, I'm going to pause this here for a second. Are there any initial questions right now? Because that was a lot to kind of cover. It was very technical, and I am going to push this forward just a bit so I don't look like a complete goof. Always, like I said earlier, that's not better. That's not better. Anyway, any initial questions right now? Let's go ahead and push this forward a bit. I'll monitor for questions. I may pause here in a second. So give me one second. Earlier, if you have more questions, log into your account at mycrypto.guru, join the forums, engage in discussion. We're even going to have a private and semi-private webinars, consulting sessions for those who are interested in more specific information. You can get on Facebook and join the mycrypto. Sorry, we're just going to go ahead and cut that there. Sorry. I keep forgetting to turn the microphone off. So we'll go ahead and cut that right there. I didn't realize it was just basically getting into just the advertisement for My Crypto Guru. Again, this was all based on, us having a YouTube channel and a website and all that stuff years and years and years ago. So, okay, is there any initial questions? Let's just talk about questions right now for how Bitcoin works on a tech level. What do we have going on there? Holy jeez, we've been on here for 45 minutes. Okay, so Kevin wants to know what pays Bitcoin to operate, which is very, very valid. When a miner mines a block, so in there, I think in the video, we showed how, look, miners are out there mining blocks, and when they confirm that a block is legitimate, what happens? A miner, at the time no, miners are not on salary, per the question I just got. So Statistically speaking, if you are out there trying to solve blocks and you have 100 million guesses per second, okay, this is going to get a little more advanced than I intended to, and this is why we're going to cut this video here. And you are mining blocks, and let's say you're mining, you're doing all the mining, you're the entire Bitcoin network, okay, and you're doing 100 million calculations per second to mine those blocks and to figure out the transactions and all that. And I come along and I want a 50% chance of also mining the blocks. I have to come in with 100 million guesses per second. The point is, though, and don't wrap your head around that part, just understand that the more you contribute to the network, the higher the statistical chance you have of finding a block, which means that over time, percentage-wise, okay, you're going to be paid proportional to the amount of work you put in. You might get lucky a couple times here and there. You might find a block earlier. You might have bad luck, and next thing you know, for the next 2 weeks, you don't find anything. But in a general sense, over time, statistically speaking, you should be rewarded based on the amount of work you put into the network because it's random. Okay? So if you're in there putting 100 million, he's putting 100 million in, you each have a 50-50 chance because you're both 100 million of the 200 million guesses that are going into the network. Now, again, extrapolate that, of course, across everybody. Now, the question is, how do miners get paid? They get paid when they mine a block. They get paid when not only do they confirm all the transactions in the block, but through their random guesses, they solve that little cryptographic hash, okay, that's down at the bottom of the block. That number is that equation is written in such a way that it is easier to guess the number and simply try it than it is to work backwards through the equation and find the answer. Again, that's a lot of math we can't cover here, but you just have to trust me on this. So the equation is written in such a way where you are better off guessing the number and trying it. That's why I say you got 100 million guesses. You have 100 billion guesses. You have whatever it is per second. So you create this block because you happen to guess the number right. If you are 10% of the network, you should statistically get about 10% of the reward. Around every 10 minutes, a block is made. Now, that'll fluctuate again because we are guessing, okay? So, while I've seen a block created in 45 seconds because that guy just got lucky and just happened to pop in, and I've seen a block take 20 minutes. But on the average, it should take 10 minutes. What happens when more miners, I know I'm getting way off your question, sorry. But what happens when more miners come in? They adjust the Bitcoin protocol, not they, there's no humans involved. The Bitcoin protocol adjusts the difficulty to get it back to the 10 minutes. So if all of a sudden we get a 50% increase in the number of miners, and now we're doing, let's say 5-minute blocks instead of 10-minute blocks, okay, because now we have more people guessing, then I got to stay away from that. This is not people. This is the protocol. The protocol will adjust the difficulty up to get back to about a 10-minute spot, okay? Now, so what happens when somebody gets, this is the actual question you ask, okay? What happens when a miner finds a block? Their account, and nowadays it's really not an individual miner, it's a pool of miners, but their account is credited with the mining fee. Right now, that mining fee is 3.125 Bitcoins. Okay, so every time a block is mined, 3.125. Let me just double check it. We had the halvening. That is not correct. That's from 2011. Anyway, we should be at 3.125, 3 1/8 Bitcoin. Okay, now that is credited to their account along with all the transaction fees that were attached to the transactions that were in the block. And that's important to know because we go, okay, well, every 4 years ish, the mining fee, the block reward is what it's called, gets cut in half. Okay, so we go from 50 to 25 to 12.5 to 6.25 to 3 1/8, and eventually it's going to work its way down. Okay, until there's really no reward left. Once we get down to the 21 million or just shy of 21 million coins that are mined, okay, in roughly 80, 90 years, okay, there will be no more mining rewards. So what's going to pay the miners? Well, it's going to be the transaction fee. In order for you to send money on the Bitcoin network, you have to attach a fee to get you into that block, okay? So there's only so much room in that block. The Bitcoin doesn't care how many Bitcoins you're sending. It cares how much you're using the network. It's a bandwidth issue. If there's only 1 meg of space and you're taking up 20% of it, you need to be a fee commensurable to getting that in that spot. So they get the transaction fees in the block, and they also get the block reward. Okay, that's how they're paid. And as the block reward gets smaller and smaller, obviously the Bitcoin price may get higher and higher to compensate for that. But as the block reward gets smaller and smaller, the network transaction fees should be able to take place on that, to take the place of the block reward, because the price should be higher. In other words, as Bitcoin gets adopted, they make more money. So does that answer your question? I think we'll see. So let's see. What other questions we got here? Unless Kevin's got another question or somebody dumps one on Facebook, guys, I think we're pretty covered. Where else are we at? I'm going to give you guys a couple seconds to kind of throw out something else. If there's anything else that we want to know on the technical level. Or anything I skimmed past really quick that you guys need some clarification on. So, I think we're okay. I don't see any other questions coming in. I don't see anybody asking anything. So, you guys know how to get a hold of me. Pretty much everybody on here is a friend of mine. They're probably on my Facebook page anyway. I appreciate you guys coming in. It was my first trial run of trying to figure out how this new platform works. And if you have any other questions, you guys can send me a PM if you want. And don't forget, at least locally here in Cape Girardeau, we will be having a, not really advanced, it's not advanced, I don't want to use that word, but it would be slightly more advanced than this level come Tuesday at Codify. So if you guys want to go, let me know. I'll send you the event invite and all that stuff, and we can meet in person. You can ask much better questions and probably be a little easier for me to answer for you. But anyway, so now let me figure out how the hell to turn this off, and we'll go from there. Again, if you guys need me, let me know. And if you have friends, have them join me on Vimeo, because otherwise I can't make a living. So I'll talk to you later. See ya.